Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Firdaus. I will be presenting the question 1A. The question is whether to choose setting up a branch or subsidiary in Malaysia. So the answer is Redten should choose to set up a subsidiary in Malaysia because the company, which is a foreign company, want to expand the business into Malaysia for a long-term period of time. Redten is not suitable to choose a branch because the branch is only suitable for a foreign company who want to expand the business into Malaysia for a short-term basis. According to the government of Malaysia, foreign company that incorporate subsidiary in Malaysia will be considered as a tax resident. So the company will be entitled for a certain tax benefit and deduction available to resident company. The subsidiary will have a board of director in Malaysia. An individual who will serve this role can be appointed by the parent company abroad. In Malaysia, branch and subsidiary are subjected to the same tax filing and payment obligation. For question 1B, the question is whether to commence business during financial ended 31st December 2019 or 2020. The answer is Newco has a paid capital 2.4 million and an estimated gross income of 1 million, which qualify them as a small and medium-sized enterprise, or we call as SME. The deciding factor whether choose 2019 or 2020 is the amount of tax payable. If Newco commence in year assessment 2019, the first 500,000 will be taxed at 17% and subsequent chargeable income at 24%. Total tax payable for year assessment 2019 will be RM 205,000. But if Newco commence in year assessment 2020, the first 600,000 will be taxed at 17% and subsequent chargeable income at 24%, meaning that total tax payable for year assessment 2020 is RM 198,000, which is lower than year assessment 2019 by RM 7,000. So Newco should commence its business at year assessment 2020.
Okay, hi, Assalamualaikum. I am Wan Muhammad Anas and I will be present for question 1C and question 2A. Okay, for question 1C, the question is, what is the best tax investment that can significantly reduce its tax liability after finish claiming investment tax allowance or ITA? State the reason. Okay, according to PIA 9089, they does not provide for extension of investment tax allowance to be given to a company for another 5 years. But after finishing claim of ITA, the investment allowance is the best tax incentive that can reduce its tax liability. Okay, so I give four reason, which is the first one is the asset that is granted by the allowance is disposed of within 5 years will be withdrawn. Okay, the second one is the allowance is computed at 60% of QCE or qualifying capital expenditure incurred by the company, and it can be utilized against 70% of statutory income. Okay, the third one is the 70% restriction does not apply to projects that have achieved the level of productivity as mentioned by the Minister of Finance. Okay, and the last one is it has been manufactured at least 36 months. Okay, so that is a reason. Okay, thank you. Okay, back to me again, Wan Muhammad Anas. Okay, for question 2A, the question is quiet good, which is advise Pamka on the disposal of its machinery in term of timing, assuming all machine will be disposed to external party except for the stamping machine. That is a very good question. Okay, for machinery, we give it with two answer, which is RE is less than sales proceed and RE is higher than sales proceed. Okay, for the first situation, which is RE is less than sales proceed, the disposal of machine should be disposed or postponed to the following years, which is 31st 31st May 2021 to defer tax liability. But if RE is sales higher than sales proceed, so the disposal of machine should be disposed at year's end of the current year, which is 31st March 2020. Okay, it has been that to obtain balancing allowance to shelter adjusted income. Okay, for stamping machine, we have control transfer, which is the disposal of stamping machine should be at year end of the current year, which is 31st March 2020. Okay. And subject to control transfer, no BC or no balancing charge or balancing allowance will be incurred.
Assalamualaikum warahmatullahi wabarakatuh. I'm Adriana Batrisyia binti Karul Bahrain, and I will be explaining the next question, which is question 2B. The question asks, advise PAMKA on how to save tax on the disposal of the stamping machine. So, under paragraph 71, Schedule 3 of Income Tax Act, the tax authority is empowered to claw back the capital allowance claimed in previous years and treat it as a balancing charge if the disposal takes place within 2 years of acquisition. Therefore, PAMKA Sdn Bhd is advisable to dispose of the stamping machine 2 years after the acquisition date, which is after 31st May 2021, in order to avoid clawback of balancing allowance and therefore save tax on the disposal. Let's proceed with question 2C. The question asks, state whether Damchi Group of companies can make use of group relief to reduce tax liabilities in years of assessment in 2020 and 2021. In the year of assessment 2020, Damchi Sdn Bhd is not eligible to claim group relief because PAMKA Sdn Bhd paid up capital is only 2.3 million ringgit, which does not fulfill the conditions of group relief, as the paid up capital must exceed 2.5 million ringgit. Next, Ruba Sdn Bhd is not eligible for group relief because the company is currently enjoying investment tax allowance, which also does not fulfill the conditions of group relief, as both of the companies cannot enjoy any tax incentive. And lastly, Damo Sdn Bhd can utilize the loss of Damchi Sdn Bhd, as both of the companies does not currently enjoy any tax incentive. Both of the companies have the same 12 months of accounting period, and the shareholding of Damo Sdn Bhd is 75% in Damchi Sdn Bhd, which is more than 70%. Meanwhile, in the year of assessment in 2021, Damchi Sdn Bhd cannot make use to claim group relief unless PAMKA Sdn Bhd increases its paid-up capital more than 2.5 million ringgit. As claiming investment tax allowance is for 5 years, Ruba Sdn Bhd is still not eligible for group relief. Damchi Sdn Bhd can make use of group relief of Damo Sdn Bhd as long as it does not enjoy any tax incentive. Both of the companies still have the same 12 months accounting period, and the shareholding of Damo Sdn Bhd is more than 70%, which satisfies the conditions of group relief.
Assalamualaikum. My name is Nurul Fatihah binti Kamar Zaman, and I will continue on question 2D and 2E. For 2D, advise Ruba on the best method of financing its purchase of new machineries. Under leasing, the company entitled to claim the full leasing charge as a revenue expense if it is incurred wholly and exclusively in the production of income of the company. However, Ruba is not entitled to enjoy investment tax allowance and claim capital allowance on the leased asset as the company is not the owner of the assets. Under long-term loan, capital allowance claim will be based on the full cost of qualifying assets. The company will be entitled to claim initial allowance and annual allowance on the full qualifying expenditure in the first year. Thereafter, annual allowance for each subsequent year until the full relief is given to the qualifying capital expenditure. The loan will be allowed as a revenue deduction by virtue of Section 33 1A. Since Rupa Sdn Bhd is a profitable company and currently involved in manufacturing of promoted product, they should finance the purchase of the new machineries through long-term loan because the company can enjoy investment tax allowance. The company gets an allowance of 60% on the qualifying capital expenditure incurred within 5 years. This allowance can be offset against 70% of statutory income. In order to enjoy the investment tax allowance, the company has to be the owner of the asset. This can reduce tax liability of the company. For the last question, 2E, advise Damci on which company should be taken over, either TSG Sdn Bhd or KY Sdn Bhd, and the method of acquisition, either by acquiring assets or shares. Damci Sdn Bhd should choose TSG Sdn Bhd to take over because TSG has the same nature of business. TSG is also currently claiming its first-year pioneer status, which will make TSG enjoy the tax benefits as the company will be liable for the exemption of income tax for a period of 5 years. Damci Sdn Bhd is also very confident to turn TSG into a profitable company, and the owner of TSG has already agreed to dispose of it. The best method for Damci Sdn Bhd to acquire TSG by way of acquisition by share. The main advantage of acquisition by shares is that the tax attributes such as unabsorbed tax loss or tax incentive remains with TSG. Generally, companies are allowed to carry forward their accumulated tax loss for 7 years and unutilized capital allowance to be set off against their business income for the next year. Furthermore, companies that cease operations for several years may still utilize accumulated loss and unabsorbed capital allowance to be set off against new business income. Moreover, any proceeds from sales will be paid directly to Damci, which may result in lower tax liability. The transfer of share will not be taxable since it is capital in nature. It will only be taxable if it is real property company shares because it is subject to real property gain tax. The company also just started claiming the first year of pioneer status in the business. So, the company got the partial tax benefits exemption due to the tax incentives. If Damci Sdn Bhd acquired TSG by assets, Damci Sdn Bhd will own the assets and are able to operate the business immediately. Generally, unabsorbed tax loss and capital allowance of TSG may not be transferred to the acquiring company in an asset acquisition. However, Damci can enjoy the additional capital allowance since both companies are operating in the similar nature of business. Furthermore, tax liabilities and business risks are attached to the first buyer of the assets, which is TSG Sdn Bhd. Therefore, it will not be transferred to the acquiring company, which is Damci Sdn Bhd. Currently, TSG will enjoy any tax incentives or exemption which will unlikely be transferred to the acquiring company. Thus, Damci Sdn Bhd will have to submit a new application for tax incentives or exemptions upon acquiring the business if it is eligible. That's all from us. Thank you.